morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, August 11th. All right, well, we got a little bit of movement to the downside. Wasn't so crazy about the movement, I'll be honest with you. Today's really an important day to get any type of follow-through. If you recall, we haven't had two consecutive down days in weeks. I mean, literally weeks. Good down days. So, the buyers of dips are out there in still force, and it's still looking for higher prices when you have a market that's fairly valued, fully valued for that matter, and it's just crazy. It's just absolutely nuts. But it is the summer doldrums, and there's a lack of liquidity. There's no volatility at all. You could see the VIX did pop its head up for the first time in many, many weeks, but then sold off right back to the opening. So no movement yet again. And again, guys, I would not read too much into it until we have some sort of a catalyst to move lower, which would be extremely healthy for the markets. But until then, we have to just dive in and see what we can pick up and kind of cherry pick trades until some movement is happening here. Okay. Now I want to look at the rates. Rates went lower yesterday. You could see that's the 10-year. But we do have our head and shoulders pattern, inverted head and shoulders for that matter. Here's that neckline. We did break out of it, and that line I mentioned, 160, needs to get taken out and back test to confirm that we're alleviated the downside pressure. Now we're still okay. It's back tested here, but I want to see now we start to move yet again, and then take out that 160 swing high, okay, in the rates. Because if that's going to happen, then of course TLT will move lower. Let me just get that. Oh, you know what? 1 second. Here we go. Sorry about that. And then this is the VIX. Let me get to TLT. My charts are all screwed up here. Okay, here we go. And now we just made another lower high from this previous high, from this end top formation, and of course this descending triangle, if you will. So even if we get a little bit higher to that swing high, I wouldn't want the TLT to get past that local swing high right up in here in this area. So if we can stay underneath that and then get a sell trigger, then I think we'll take the neckline out and eventually get down to the 136, which is the 38% retracement. So that's what I'm looking for in TLT. You have to be patient with this one because, if markets do sell off, bonds will go to flight to safety, and people will put money in bonds again. But I think ultimately rates are pretty much done going down. You might have a couple of downtick days, but I do think that 10-year and even the 2-year, which has been in a downtrend, hasn't broken bearish symmetry as of yet, but I'm watching that closely. All right, and then this is setting up to be a decent trade to the downside. All right, and then here's the VIX again. Sorry about that. Mixed the charts together. You can see the VIX kind of moved its head up. Look how tight the Bollinger Bands are. And again, we do have some positive divergence in lieu of the MACD. Okay, here we have RSI up top here, and then we got the CCI, which is just right underneath here, starting to curl up as well. So momentum is building, pressure is building, and I do suspect that we should see some higher prices, at least maybe to 16, even 17 at one point in time. And that can happen in relatively quick, 2, 3, 4 days. You get a couple of down days, a string of down days, and we need it desperately. But unfortunately, that's not what's happening. We have GDX started to break lower here, and then you could see these areas here. And this is with our premium for our premium subscribers. But just wanted to again show this to you this week and show you how valuable these areas are. Still underneath these trend lines, and you could see here, guys, we're flatlined here in the MACD. So there's not a lot of oomph behind this rally to the upside. So I would still suspect we move lower, get down below the 23% retracement, and ultimately down to that $27. But again, this is the main reason why I'm showing you is that gold does not act this way for no reason, guys. And this is there's a lot of big, smart money that are just piling into gold for a safe haven trade. I mean, and it's something I can't go unnoticed. Here's the GLD. And again, just want to show you that 23% retracement, looking for that 125, maybe that 120, what do you call it, the 126. The 61.8% retracement right around 126. Up top here, that's at 38%, and then we're back down here from this little M double top formation. All right, but you can see here momentum is still waning to the upside. So I do suspect even if you got to 1380 in the GC contract, in the futures contract, there's a lot of resistance up there. So I do think that would probably fail and then start to roll over again and possibly test 1314, 1300, and then start to really pick up some steam to the upside. All right, here's the spiders, different view. I wanted to show you, still from the high to low. We do have our doji that triggered to the downside. You could see that here. We took out that low yesterday. But again, what are we doing? We just tested the upper end of support, which was resistance at 217.50. We need to really take out the 214.45, 214.50 in order for us to get some downside momentum, guys. And if we do that, I do think that you'll see 210 in the spiders shortly. Okay, here is the 60-minute view. We show you that we're starting in a decline in a descending triangle here. Excuse me, a descending channel. All right, and you can see here momentum is again waning. It's not a bad thing. It does alleviate some overbought readings, but still, prices start to move lower lows and lower highs. This is the area again, closer view to 214.50 that really needs to get taken out. Again, just showing you some of these actionable areas from our premier members. Transports, IYT, you could see here, really not doing too much. And this is also something to be nervous about if you're a real bull thinking that the markets are going to go higher. Lower lows, lower highs continues. You could see here on this downtrend channel, downtrend line, trend line, and the 200 is going to really have to be play here. Once we get that below that, you'll probably test the 136 and then ultimately the Brexit low. But again, we really need to see some more movement to the downside. Now, you can see volume has picked up a bit, and we have the Bollinger Band starting to pinch in the daily chart. So momentum is building. I do suspect that we're going to get a really explosive moves in the next coming days and weeks in August. They are notorious for an increase in volatility, so we'll just see what happens here. Again, IWM, we took that little doji out, and we just tested the upper end of support, which was resistance. So again, it needs to really start to break down here and take that lower end of that area out. So still a little bit of weakness in the markets, and we're just going to take it one day at a time. Unfortunately, it's really been boring. Here's the Qs, 116.30 still coincides nicely with that support area. And look how far away we are from the 20-day moving average. So between that and, of course, the proprietary price channels, you have to kind of be wary that at least we would do a revision to the mean right back into here. All right, guys, I hope it helps. Let's see what happens today. Hopefully we get some follow-through and we can get some trades off. I mean, this has been quite boring the last actually 3 weeks, pretty much most of July, and now we're getting into August, and it's not really been moving. So we'll see. Let's take it one day at a time. Be safe out there. We'll see you tomorrow. Take care, guys.